studying your last two. I swim med when they turned in. The styrene down to mute. And can learn the pole that sunk he died.
When beginners first learn about Schedule 4, they often assume there is only one correct answer when applying corporate tax losses. In practice, experienced tax preparers usually evaluate different possibilities before deciding how much loss to claim in the current year. This is where what-if scenarios become useful. Imagine that a corporation has an available tax loss carried forward from previous years. Before completing Schedule 4, the tax preparer may consider several options. The first option is to apply the entire available loss in the current year. If the loss is large enough, it may reduce the corporation's taxable income significantly, or in some cases, even reduce it to zero. This provides the maximum tax benefit immediately, but it also means there is no remaining loss available for future years. Another option is to apply only part of the available loss. This still reduces the current year's taxable income, but it leaves some of the loss available for future taxation years. Depending on the corporation's future business plans and expected profits, this may be a better long-term strategy. Notice that both options follow the tax rules. The difference is that the tax preparer is evaluating which approach best fits the corporation's overall tax situation. This is why professional tax preparation involves more than simply filling in forms. It also involves planning. A tax preparer may compare several scenarios, calculate the tax impact of each option, and then recommend the approach that provides the greatest overall benefit for the corporation. Think of the process as asking a series of questions. Should the corporation use all of its available losses now? Would it be better to use only part of the losses? Could preserving some losses for future profitable years create a larger tax benefit? These are planning decisions, not just calculation exercises. The important point is that Schedule 4 is more than a record of past tax losses. It is also a valuable planning tool that helps determine when those losses should be used. The key takeaway from this lesson is simple. Schedule 4 is not only about recording corporate tax losses. It also helps tax preparers decide how much loss to use today and how much to preserve for future taxation years. In the next lesson, we'll look at the Schedule 4 Supplementary Worksheet, which many tax preparers use to compare different loss application scenarios, organize their calculations, and document the reasoning behind their final decision before completing the T2 return. When experienced tax preparers work with corporate tax losses, they don't usually complete Schedule 4 immediately. Instead, they often perform some planning first to determine the best way to use the available losses. One of the tools that can help with this planning is a Schedule 4 Supplementary Worksheet. Think of this worksheet as a planning document rather than an official CRA schedule. Its purpose is to help organize information, compare different scenarios, and decide how much of the available tax loss should be applied before the final Schedule 4 is completed. The worksheet usually begins by identifying the corporation's beginning loss balance. This tells the tax preparer how much eligible loss is available from previous years. Next, the corporation's current year taxable income is entered. With these two pieces of information, the preparer can evaluate different loss application strategies. For example, one scenario may involve using the entire available loss this year. Another scenario may involve applying only part of the loss and carrying the remaining balance forward. Each option produces a different result for taxable income, the remaining loss balance, and future tax planning opportunities. The worksheet allows these alternatives to be compared side by side before making a final decision. Many tax software programs also perform this type of analysis automatically, allowing preparers to compare several what-if scenarios and immediately see how each choice affects the corporation's tax position. The important point is that the goal is not always to reduce this year's taxes as much as possible. Sometimes preserving part of the available loss for a future profitable year may provide greater overall tax savings. The supplementary worksheet helps organize these comparisons in a logical and documented manner. A typical planning process is straightforward. First, record the available loss balance. Next, review the corporation's current taxable income. Then evaluate several possible loss application scenarios. Compare the tax results of each option. Select the strategy that best fits the corporation's overall tax situation. Only after that planning process is complete should the final Schedule 4 and T2 return be prepared. One of the most common mistakes made by beginners is completing Schedule 4 without first considering alternative loss application strategies. Professional tax preparation involves more than entering numbers. It also involves evaluating different possibilities before deciding on the most appropriate approach. The key idea to remember is simple. The Schedule 4 Supplementary Worksheet is a planning tool. It helps tax preparers analyze different loss application scenarios, compare the results, and choose the most appropriate strategy before completing Schedule 4 and filing the corporation's T2 return. Professional tax preparers do more than calculate numbers, they evaluate options before making a final decision. The goal isn't simply to complete Schedule 4 as quickly as possible. The goal is to determine the most appropriate way to use the corporation's available tax losses based on its overall tax situation. The review process usually begins by identifying the corporation's available loss balance from previous years. Before any losses are applied, the tax preparer confirms exactly how much remains available and verifies that the Schedule 4 records agree with prior year tax returns. Next, the corporation's current year taxable income is reviewed. This provides the foundation for deciding whether using the available losses this year is beneficial, or whether it may be better to preserve some of those losses for future years. Experienced tax preparers also think ahead. They consider the corporation's future expectations. Is the business expected to earn higher profits next year? Could a larger deduction provide greater tax savings later? These are planning questions that help determine the most effective strategy. After reviewing both the current and future tax situation, the preparer decides how much of the available loss should be applied. The objective is not always to eliminate taxable income completely. Sometimes using only part of the available loss creates a better long-term tax result while preserving additional deductions for future years. Once that decision has been made, Schedule 4 is updated to record the amount of loss applied during the current year and the remaining balance available for future taxation years. Only after this review and planning process is complete is the T2 return finalized. Before filing the return, experienced tax preparers often ask themselves several important questions. Should all available losses be used this year? Would a partial claim provide a better long-term benefit? Is the corporation expected to earn higher taxable income in future years? Have all calculations been reviewed carefully? Does the supplementary worksheet support the final decision? And does the completed Schedule 4 agree with the corporation's overall tax planning strategy? Developing these professional habits helps improve both accuracy and consistency. Comparing different scenarios, documenting your reasoning, reviewing your calculations, reconciling prior year balances, maintaining organized working papers, and performing one final review before filing all contribute to a well-prepared corporate tax return. The most important lesson from this chapter is simple. Good tax preparation is not just about completing Schedule 4. It is about evaluating different loss application scenarios, documenting your analysis, and choosing the strategy that best fits the corporation's overall tax position before filing the T2 return. By thinking through these decisions carefully instead of simply entering numbers, you'll prepare more accurate returns, provide greater value to your clients or employer, and begin developing the professional judgment that distinguishes experienced tax preparers from beginners.